Imagine this. You're standing in a bustling Arabian bazaar 1,000 years ago. The air is thick with spices from India, gold glitters in the desert sun, and voices call out in Arabic, Greek, Persian, and Chinese. A Venetian traveler waves a silver coin. A Berber merchant counts copper. A silk trader from China shows his woven goods. Everyone wants to trade, but there's a massive problem. No one trusts each other's money. What if the silver is fake? What if thieves attack on the road? What if coins aren't accepted hundreds of miles away? Global trade seemed impossible. But Arab merchants had a secret weapon. They created a financial system so advanced it feels like time travel. A system that looks shockingly like today's crypto exchanges. They invented hawala networks that work like blockchain, paper checks that acted like PayPal, and currency exchanges that functioned like forex. This wasn't Wall Street or Silicon Valley. This was Baghdad, Cairo, and Damascus during the Islamic Golden Age. By the end of this video, you'll see why the real first crypto exchange wasn't Binance or Coinbase. It was built more than 1,000 years ago on the Silk Road. Part 1. The problem of ancient money, 350 words. Long-distance trade in the Middle Ages was dangerous. Carrying gold meant attracting bandits. Every caravan was a moving target. Even worse, coins weren't universal. A Byzantine gold solidus had no guaranteed value in India. A Venetian ducat might be refused in Cairo. And each kingdom minted its own coins, often shaving metal or lowering quality. Traders faced 3 headaches: risk of transport, gold could be stolen or lost. Trust issues, nobody trusted strangers' money. Currency chaos, dozens of different standards. For trade to work, merchants needed something revolutionary, a system that moved value without moving metal. And that's exactly what Arab traders built. Part 2. Hawala, the first blockchain, 500 words. Enter hawala. In Arabic, hawala means transfer or trust. But it wasn't a bank. It was a network of brokers. Here's how it worked. A merchant in Cairo gives 1,000 dinars to a local broker, a hawaladah. The broker sends a code, maybe a phrase, a symbol, or even a word of honor, to his partner in Damascus. The merchant's business partner in Damascus shows the code and collects the 1,000 dinars. No gold traveled. No bandits could rob it. The transaction was instant, trustless, and secure. This was peer-to-peer finance before the internet. Hawala had the same features as blockchain: decentralized, thousands of hawaladahs across regions; borderless, working from Spain to India; trustless, secured by reputation, not kings or banks; fast, days instead of months. And the system lasted. Even today, hawala operates across the Middle East, South Asia, and Africa. Migrant workers use it to send money home cheaply and fast. In other words, hawala is the OG crypto exchange. Part 3. Paper checks. Digital payments before digital, 350 words. But hawala wasn't the only invention. Arab merchants also pioneered paper checks. The word sack means written order of payment. From it comes the English word check. Instead of hauling coins, a trader could write a sack instructing payment at a distant city. His partner could cash it with proof of identity. This was revolutionary, safe, worthless to thieves. Portable, just a slip of paper. Universal, recognized across the empire. It was basically PayPal in the 9th century. The Abbasid Caliphate, which stretched from Spain to India, created the perfect environment for checks to thrive. One traveler could move value thousands of miles without carrying a single coin. Part 4. Currency exchanges and arbitrage, 400 words. Markets from Baghdad to Cordoba were filled with coins: Byzantine, Indian, Chinese, African, and Arab. Money changers became vital. They calculated daily exchange rates, swapped currencies, and speculated on values. This was the first forex market. A clever merchant could profit from arbitrage, buying coins cheaply in one market and selling them at a higher rate in another. It's the exact same logic as flipping Bitcoin into Ethereum or stablecoins today. Arab traders even used gold-silver ratios to predict profits. If silver was undervalued in Persia and overvalued in Egypt, you could make money simply by moving currency through the hawala network. In short, medieval traders were doing crypto trading with coins. Part 5. The legal and cultural framework, 250 words. Why did this system work? Trust. Islamic law, Sharia, emphasized honesty, written contracts, and fairness in trade. Breaking trust wasn't just a business risk, it was a spiritual one. This legal culture made merchants confident. A sack in Baghdad could be honored in Cairo. A hawala code in Delhi could be trusted in North Africa. It wasn't just money. It was a network of trust, contracts, and honor. That's what allowed the system to scale across continents. Part 6. Legacy and Influence. 200 words. Europe borrowed heavily from this system. Sack became check in English. Italian bankers adopted bills of exchange straight from Arab traders. The hawala model inspired later colonial remittance systems. Even today, when you wire money or use an app, you're relying on concepts Arab merchants developed more than a millennium ago. OUTRO. Final thoughts. 200 words. So, was crypto really invented in 2009? Or was it rediscovered? Arab traders built the first decentralized, borderless financial network. Hawala was blockchain before blockchain. Sack was PayPal before PayPal. Currency exchanges were Binance before Binance. Satoshi Nakamoto didn't invent the idea of digital money. He revived a system Arab merchants had mastered 1,000 years ago. So next time someone says crypto is the future, remind them, sometimes the future is just history repeating itself. If you enjoyed this story, smash that like button, subscribe for more forgotten history, and share it with your crypto-loving friends. Because the truth is simple, before Bitcoin, there was Baghdad.